Good morning, everybody. It's 9 o'clock. First off, I'd like to welcome you to the ARTA and the ATRF webinar. This is a webinar, therefore your microphones and your video have been disabled. If you have any questions throughout the presentation, please use the Q&A function in Zoom. So it's just that little speech bubble in your Zoom menu. We will answer questions at the end, but if you want to put your question in throughout the presentation, just to make sure you don't forget what your question is, Linda or Gary or I will get to your question as the webinar goes on. There is going to be a poll at the end of the webinar. So if you don't mind sticking around, I'm going to put up the poll with a couple questions from the presentation and just answer those. That would be fantastic. ATRF is going to start us off with the webinar. We have Linda, who is going to present for us. And then Gary Sawatsky, our Chief Operating Officer at ARTA, is going to speak on ARTA. But with that, I'll hand it off to Linda to get started with the ATRF presentation.
Great. Thank you, Jennifer. Welcome to our webinar. My name is Linda Lau. I'm with the Alberta Teachers Retirement Fund. Before we get going, the Alberta Teachers Retirement Fund is now walking on a path of understanding truth and reconciliation alongside Indigenous peoples. We respectfully acknowledge the traditional lands and ancestral territories in which ATRF is headquarters as Treaty 6 territory, Miskiwaski Washahikan, Edmonton, Alberta, and the homeland of the Métis Regional Zone 4. So we prepared this presentation with most frequently answered questions in mind. What we ask is that you please add your questions to Q&A, but if you can wait till the end, because you may find that during the presentation, your question may have been answered already. We are not going to address any Q&As until the end of my presentation. But here's a basic overview of the topics we're going to discuss, and we're going to try to get this done in half an hour. If you see anything on there that you already have questions for, then you'll know that topic is coming up and we'll be discussing it. But before we get going on to the main presentation, there's a few things we want to mention. We would also like to address and take a moment the Government of Alberta's announcement regarding AIMCO on November 7th. We want to assure you that your pension remains secure. Nothing has happened with regard to the changes at AIMCO thus far that has caused us any concern about the status of our investments. The health of your pension plans and the security of your pension have always been our highest priorities. We will continue to monitor the situation closely, and we will inform our members that if there are any impacts that you should be aware of. Meanwhile, we are going to talk about these main things in this presentation today. So let's begin with your pension information statement. If you've already been collecting your pension for over a year, you will have received one of these statements. These are usually prepared and in January when we get the most updated payments for the current year. The 2025 year will be your next one. Now, your statement includes two key updates each year: the cost of living adjustment increase and the income taxes. While we aren't able to calculate your COLA increase in November, the tax tables are not confirmed by Canada Revenue Agency until the end of December. So therefore, as a result, we have to wait for these tax tables before we can determine your new pension payment amounts with the COLA and the tax deduction. Just some side information, the Alberta minimum standards require a pensioner annual statement to be issued within 180 days of the fiscal year. And although ATRF's legislation is not subject to the Alberta minimum standards, ATRF's preparation of the pension information statements within the first 30 days of the fiscal year far exceeds the timelines of our Canadian and Alberta pension peers and Alberta minimum standards. So to update your information, you can always phone, email, fax, or mail ATRF. However, the most secure method to communicate with us is through your secure message center, which is right here. You can receive messages and you can send messages. You can also provide your personal update information on the online portal as well. You can do that right here rather than sending forms or calling or emailing. So you have that option. But basically, it's very important to make sure your personal information is always up to date because that'll help us ensure we get all the information to you correctly. So when you're registered for My Pension, you can receive an email notification advising you when a digital copy of your pension information statement is ready. So if you're registered, you can go into communication preferences and turn on the send me an email notification, and that'll alert you that there is your information statement is there, and you can access it digitally online. You don't need to wait for us to mail you the copy. Um, However, we normally do mail them at the end of January, and statements already available early January digitally. But yes, we know there is a Canada Post strike. So if the strike is ongoing by the end of January, we will hold the statements. We will not be mailing them until the strike is resolved. Meanwhile, though, it's the same thing. We will have your statements prepared by early January. You can go online and you can access them by viewing it through your online uh, pension account. Pensions. So we're just going to go on this, cover some of the options. Some people need refreshers. So prior to September 1995, there were 8 pension options, but currently there are 7 pension options, 3 joint and survivor options, and 4 single life options. With all these options, the pension is paid to you, the member's lifetime. So retired members will receive their pension for as long as they live. So based on the option you have chosen, the amount may change if you had a pension partner and your pension partner passes away first. This will depend on which joint option you have chosen. So we're going to review the joint survivor options first. And again, remember, this is payable for the retired member's lifetime, and if the member predeceases their pension partner, they receive a pension for their lifetime. So this may be a little bit of repetition when we go over different things, but your pension option cannot be changed after you started receiving the payment. Regardless if you have gone through a death, your pension partner has died, or you've going through a relationship breakdown, so maybe you're divorced, you cannot change your pension option, and that pension partner will remain your nominee. Now, all joint and survivor options after September 1st, 1995 have a 5-year guarantee period for the beneficiaries. So what that means, it's guaranteed for 60 payments. So if both you, the member, and your partner dies before ATRF has paid 60 payments, then the balance to get to 60 will go to whoever you've named as your beneficiary or beneficiaries. So this is why it's very important not to name your pension partner as your beneficiary if you've chosen a joint survivor pension option. If your pension partner dies, that means your beneficiary has died. So it's important to remember that. We do watch for them when you choose your option at the very beginning when you retire, but just in case, you want to make sure that if you chose a joint survivor option, you do not name that same partner as your nominee or as your beneficiary. So we're going to talk about these 8 options. Each one pays differently when there's only one of you living. So the joint equal option pays 100% of the pension to the survivor. So if you, the member, dies first, the surviving pension partner will continue to receive the same amount, hence the term joint equal. The joint reducible by 1/3 pays a higher benefit up front, but pays less when there's only one of you living. So how this works is if one person dies, so whether it's you, the member, or the pension partner, the pension is reduced by 1/3. So for example, you are the member, you've chosen reducible by 1/3, your pension partner dies first. Then your pension will be reduced by 1/3, and you will get 2/3 for the rest of your life. The same thing occurs if you die first. The pension partner will only receive 2/3 of that pension. The joint 160 is a little different. It's kind of like a hybrid of the first two. What this allows for is 100% of the pension to be paid to you, the member. So as long as you, the member, are living, you will always get 100%. Even if your pension partner may die first, you still get 100%. But if the member dies first, then the pension partner will only get 60% of that value for the rest of their life. Then there's one more option that's no longer offered. It is the joint reducible by 1/2. So how this works is similar to the 1/3 in that as long as the member and the pension partner are living, 100% will be paid to the member. But if one person dies, the survivor will only get 50%. So now we're going to go into the single life options. So this is for those of you who who did not have a pension partner at the time, chose a single life, or maybe your partner signed a waiver. So there are 4 single life pension options. Regardless of which one you have chosen, you, the member, will always be paid. So you, the member, you're living, you're going to get paid. You live to 110, you're going to get it to 110. Doesn't matter which option of the single life you chose. So the real big question is when you die, what's going to happen? Is there anything going to be paid to beneficiary? So the first one, no guarantee, means that when you die, the pension stops. Nobody gets anything. If you have the misfortune of only collecting for a few years, the pension stops. Then there are the 5, 10, and 15-year guarantee. So if you chose those, what that means, again, you're paid for as long as you live. You live to 110, you're going to get it to 110. But if you die early in your retirement, and depending how many years you've collected for, the balance to get to that guaranteed period will be paid to your beneficiary or beneficiary. Now, this guaranteed period starts counting when your pension is effective. So for example, maybe you chose a 10-year guarantee. You collect your pension for 8 years and you pass away. We will pay the same pension amount for 2 more years to your beneficiary. Now, keep in mind, if you chose a single life option with a long guarantee, you certainly can change your beneficiaries anytime. And in fact, you can do it online through the portal, or you can complete a form. So you can change your beneficiaries anytime within that guaranteed period. So of course, once you've been collecting for beyond that guaranteed period, there's no more beneficiaries because the guaranteed period has expired. And then keep in mind one more time, if you are going through a relationship breakdown, your pension can be divided. We would need what is called a family property order. This is a legal document that has to be signed by a judge and go through the courts. Other than that, once you have passed away, the beneficiaries cannot be changed by other people. So there's the advance and reduction option. This option was an option basically for members to choose to receive at the time they started their pension. The advance is an additional payment added to your monthly gross pension. It will be taxed. It is also COLA will be applied to it. That is paid to you, the member, for as long as you live. When you turn 65, there will be a permanent lifetime reduction, and that goes on for your lifetime. It doesn't matter when you start collecting your CPP, it has no impact on the ATRF advanced reduction or pension. If the member dies first, then the advance and reduction both stop, And if it's a joint survivor option, the nominee will continue to collect their share of the pension without an advance or reduction. So next, we're going to go into pension deposits. That's the best part. You're still getting a nice deposit every month, even after you stop working. So pension payments are always on the third last business day of each month, with the exception of December. We will always make a deposit before Christmas Day, usually by the second last day before Christmas. If you're curious to know what the exact payment dates are, they are included in your pension information statement. There's an insert. As well, you can also get the information from our website. We have all the dates listed for 2025. So things happen. If you need to change your direct deposit information, maybe you have a different account set up, you certainly can get a change, but we will not take that information over the phone. That's obviously for security reasons. But the best way to update your information is you can email, fax, or mail your void check or direct deposit form to ATRF. However, we must advise that email is not necessarily the most secure way. And when you're sending that kind of information, you would probably want to consider sending it to us differently. In fact, the best way to do it is to make sure you're registered to access your online account, and you can scan a copy into your computer and you can upload it to us, your void check or direct deposit information. Otherwise, if you're registered, you can also enter that information yourself, very similar to if you applied online. You get to enter your banking information yourself directly, and that will get to us. Any banking information changes must be made before the middle of the month for it to be effective for that month's payment. Monthly pension payments for retired members living outside of Canada can be paid safely and securely into a non-Canadian account, almost anywhere in the world and in most currencies. So that's really convenient. A special form is required, and it must be signed by a representative of your foreign financial institution. If you reside outside of the country and you want your funds deposited there, or you just want them to deposit to a non-Canadian account, you should contact us directly and we will provide you with that form. Cost of living adjustments. This is always nice. Cost of living adjustments are based on legislation and are effective each January and are applied to your pension, including any advance reduction options before income tax is deducted. As part of a joint memorandum of understanding in 1992, the Alberta Teachers Association and the Alberta government, as your plan sponsors, agreed to use the factors of 60% of the Alberta Consumer Price Index for service earned prior to 1993 and 70% of the Alberta Consumer Price Index for service after 1992. The cost of each factor is funded through contribution rates, so the active teachers. Therefore, the costs through the contribution rates are contributed by active members, provided this COLA percentage of 60 and 70%. So the 60% is shared equally by teachers and the Alberta government for that COLA. The extra cost of that 10% is covered by the teachers. Some of you may be wondering, why not 100%? Just some information you know that during the discussion in the 1992 Memorandum of Understanding, the incremental cost of a 100% COLA was not considered to be affordable by either sponsor. Just a side note, not too many pension plans, if any, have 100% COLA due to the cost, because it is paid for then by the contributing active members if we were to have 100%, and that's very costly. Just to throw things out there, our Alberta pension peers like Alberta Police are at 30% COLA, and nurses, Government of Alberta staff are at 60%. So it's worth noting that the adjustments are guaranteed though. So you are guaranteed to receive that COLA adjustment every January. If you're receiving your Canada pension already, you may notice that the CPP increase is not the same as your increase to your teacher pension. And that's because the CPP uses the Canadian Consumer Price Index, whereas the Alberta teachers' pensions use Alberta Consumer Price Index, which is specific to the Alberta's economy. Your pension information statement shows your updated pension payment amount after the COLA is applied, as well as the impact on your income tax withholdings. You can visit our website here if you would like to see the COLA value. Additionally, your individual COLA calculation. So if you want to know how it's calculated and where it got how the current amount was arrived at, you can sign into your My Pension account and you would actually be able to see it right here. Uh, as mentioned, if you're interested in seeing the Alberta Consumer Price Index is calculated, so if you want to see how that is calculated, you can also visit our website. Income taxes. So we talked about the positives, and now we're talking about taxes. Everyone has to pay taxes. Your pension is taxable income, so you do have to report it on your income tax return. When you make contributions from your paycheck, those contributions were not taxable. So now that you're receiving income, it is. The Canada Revenue Agency and Revenue Quebec require that all income tax information slips, so your T4As, NR4s, and RL2s, must be mailed by February 28th of each year. ATRF typically mails them in mid-February. And just like the statements, we are aware that Canada Post is still on strike. So if the strike is ongoing, we will hold your tax slips. We will not be mailing them out until the strike is over. And again, we will not email them for security reasons. However, if you are registered for My Pension, you can access your tax slip right in your My Pension account. And you can even sign up to be notified that it's there. So they may be there by mid-February, so you don't have to wait till the end of February, even if we were mailing them. So that's another option. If you move and we didn't have your updated address, you won't get the mail copy, which is another reason why it's always important to update your address with us. But you actually can obtain a duplicate tax slip now in your My Pension account. So that's really good. That's a good self-serve option. If you want a duplicate mailed, it will be at least 3 to 7 days, assuming there's no more postal strike at that time. You can change your communication preferences through your My Pension account if you wish to be notified or if you do not wish to receive a paper copy and just access it online. You can also change it back to the opposite. If you're concerned about a postal strike, you can change it. And then maybe when the postal strike is over, if you think you still prefer paper, you can go back in and change it. Because we are not aware of your other income, we can't really advise on how much income tax you should be deducting from using from your HF pension. If that is a concern, you can always calculate the tax amount that we withhold by going to the Canada Revenue Agency website or the Revenue Quebec. They have calculators, they can help. We do rely on the information from your last federal and provincial tax credits return. Most members would have done it right at the beginning when they applied for pension. Now, you are not required to complete a new one each year. We update the tables as CRA updates theirs. However, if you want to request for additional or change the additional tax you have us taken off, we have a form that you can complete that's much easier to use. Some important things about your tax. Again, your ATRF pension is not affected if you apply to receive Canada Pension or Old Age Security. That has no impact on us. It's completely separate. However, even if you're receiving an advance reduction, it doesn't matter when you actually collect your CPP. It has no impact on our set dates. If you have income from other sources, such as CPP OAS, or maybe you're working during retirement, you may owe additional taxes when you file your income tax return. As you know, they catch everybody at April 30th, so it's important to get that going. Again, if you have questions about your taxes, we do recommend you contact CRA. You can change income tax withheld if circumstances have changed. Perhaps you move to a different province. You can change all that online or again, request for a form. All the changes have to be done before the middle of the month for it to take effect. So if you're planning to return to teaching, there are some things to remember. Once you're receiving your pension, there is a limit that will impact your pension that you cannot earn more than 0.6 service in a school year. It's important to tell your employer that you are receiving an ATRF pension so they do not deduct contributions. However, there is no limit to substitute service. That was removed in September of 2011. The plan rules are very clear when a pensioner teaches on contract with an ATRF employer. So you can teach out of province, you can teach for post-secondary, but if you're teaching with an ATRF employer and you're already receiving a pension, that limit does apply. If you exceed that 0.6 limit under contract, your pension will be reduced dollar for dollar. It's important to understand that these plan rules are set and agreed upon by both the plan sponsors, the Alberta Teachers Association and the Alberta government. We don't have any discretionary ability to determine who is impacted, nor can we make any adjustments to the plan rules. Next, we'll talk about pension confirmation process. This is also important. We need to send confirmation processes out to our retired members to ensure there are no overpayments and your information is up to date. If you have a joint survivor option, then both are required to sign the confirmation. If you are separated or divorced, it is important that you provide us with your former pension partner's contact information. You do not need to contact them to sign them. We can do that. If you can return your confirmation either by mail if you've completed it, or you can call us directly and we'll ask you a series of questions. It's very important to keep your contact information up to date, as well as sending those confirmations to us. If we do not receive it, then we may have to suspend your pension payments until we do receive that confirmation. So it's very important you complete it. We choose people every year that are different, so you may not get one every year. It's also important to ensure that your loved ones or your trustee, your next of kin, are aware that they may have to help you. So we would need a copy of any power of attorneys. So then there is death. Death does happen. Just a reminder that if your pension partner passes away, sorry, you cannot change that. And as well, if you become separated or divorced, you cannot change that. So it's very important to keep us updated. If your pension partner has passed away, or if you, the member, has passed away, it is also important that your next of kin inform us immediately to prevent any overpayments. We do need the deceased name, ID number or pension number, a copy of the funeral director's statement of death or government issued death certificate, and the legal representative information for the next of kin. So last topic is the relationship breakdown. We touched a little bit on it before. Again, pensions are considered to be family property and may be divided as a result of an order. So even if you are retired, the portion of your pension that you were together, your monthly pension can be divided no more than 50%, as long as we have a court order. No lump sum payment can be paid to a former pension partner. And just a few more minutes. Sorry, I know I'm running into it, but just to show those who have not registered for your My Pension yet, when you go to our website, you click on My Pension, and this is what it looks like. So you can register here. We have an excellent video that you can use. Only thing you need to register is your ID number, valid email, and your social insurance number. If you are registered but you're forgotten, there is this forgot function that you can use to retrieve it. It's very quick, and it works in the sense that you do not have to reset everything all over again. So here's the menu. Once you're in there, we talked about a few of the things: sending messages, receiving messages, personal contact, direct deposit, income tax deduction, communication preferences, very important. And this side is where you can access your statements. If you need help registering or accessing this information, please reach out to us. We'd be more than happy to help you. So now we're going to get to our Q&A with Dana.
Good morning, everybody. Thank you, Linda. We actually just have a couple of good questions that I will respond to right now. The first one being if with the changes at AIMCO, we're being asked, wouldn't the pensions of those who are retired remain the same monthly amount? And yes, definitely, your monthly pension will not be affected by the changes at AIMCO. We want to reassure you that the pensions remain secure. ATRF continues to manage the pension plan on behalf of the plan sponsors and the teachers of Alberta. ATRF also sets the investment strategy that AIMCO has to follow. AIMCO is responsible for the day-to-day investments, but it will not affect your monthly pension. It will remain the same. Another question we have is about for recently retired people. Currently, with negotiations and that, the question is, would any changes retroactively made to the salary that they were earning while they were working affect the pension? And the answer is yes. If there is a retroactive salary adjustment that goes back into the period when you were still working, still contributing to the plan, and it affects your highest 5-year average salary, we will recalculate the pension amount that you're receiving and pay you the adjustment retroactively. So yes, that will be accounted for. Then I've got a question here, a couple of questions about first, if teachers' pensions are ever cut in the future due to negotiations, will this affect the pension of those? No. The benefit that you are receiving, you have paid for, that will not be changed by any future possible changes. The second question is, because we paid into the pension, if one dies and is single with no guarantee, did not want to choose a guarantee, why wouldn't their estate or beneficiary still receive the amount the retiree put in over the course of their career? And again, if one did not choose the 5, 10, or 15-year guarantee, what happens is all of the different pension options that you get to choose from are actuarially balanced based on life expectancy. So the different choices that you have provide different survivor benefits. And the one for single life with no guarantee provides the highest monthly payment for the plan member for life, but does not provide any protection for beneficiaries as all. So in a sense, if you take the single life, no guarantee, you are taking a chance that if you die early on in the retirement, that what you actually contributed to the plan is not going to have been paid out at that period. But that is a choice that you get to make when you're retiring. And that actually is all we have for the questions. So thank you guys very much.
Okay, thank you. We'll now pass it on to Gary Sawatsky, who will talk about ARTA and the ARTA benefit plans.
Thank you, Jen, and thank you, Linda and Dana, for all of that excellent information regarding the ATRF and the workings of the pension plan and how members can update their information and learn more about their pension plan. We're going to go into the Alberta Retired Teachers Association. We often get confused with ATRF, and obviously with our names being so closely associated, there's no reason why people wouldn't confuse us. But I'm going to give you some information today on ARTA, talk about the benefit plan, and those services that are provided for our members. So looking at ARTA, we have been around since 1963. We celebrated our 60-year anniversary last year. We are a very long-lasting and strong organization. It was set up for retired teachers by retired teachers, but in 2008, we've expanded it in order to provide health benefits to other similar groups. So groups like public service employees in Alberta or other public sector groups in Alberta. And the reason we did that is because more people in the benefit plan means more people to spread the risk over, and therefore everybody gets to benefit by more stable experience and therefore more stable rates. So it works out well for everybody. That benefit plan has been around since 1995. It's grown considerably since then. It started with a couple of thousand members. We now have over 31,000 members, and those account for over 47,000 covered lives in the benefit plan. We do have a couple of offices if you'd like to meet with somebody in person. We have offices located in Edmonton and now in Calgary. We opened an office in Calgary last April. If you are close to one of those sensors and want to visit with somebody in person, you can always do so. If you are not, we also offer virtual in-person services, so you can still meet with somebody over video virtually, or you can simply call us. That's always available, or send us an email. We have some great advantages if you are an ARTA member. We have a number of wellness initiatives that run throughout the year, such as wellness walks, photo contests, writing contests, a lot of things to keep our members active. We have scholarships available for your family members. We obviously, being a Retired Teachers Association, put a lot of value in education, and one of the ways we contribute to that for our members and their families is through scholarships. And we also have a great member discount program. It's got a great long list of available discounts available to our members. All of the information is available if you are an ARTA member through your My ARTA account. Keep your ARTA membership card with you. Anywhere you go, there's a good chance that we have set up that organization to provide a discount to ARTA members. Talking about that benefit plan a little more, we've been around since 1995, as I've already mentioned, and this is a not-for-profit plan. So all the premiums that are paid into the benefit plan stay in the benefit plan. Every single dollar is used to either cover overhead expenses or to pay out claims. Nobody is making a profit on it. Every single dollar stays within the benefit plan. And that's something that we're really proud of because not all of our competitors can say that. The other great thing about our benefit plan is our unique travel insurance. I'm going to spend quite a bit of time going through our emergency travel insurance in a bit, but I can tell you it is by far the best emergency travel insurance available in the marketplace for retirees. In order to be eligible to join ARTA and therefore participate in the benefit plan, we do have some requirements. The first is you must have contributed to the ATRF for at least 5 years. Given we're in a joint ATRF and ARTA presentation, you probably already qualify through that eligibility requirement. You must be an ARTA member in order to participate in the benefit plan. This plan is not open to non-members of ARTA. So anybody who is not eligible to join ARTA is not permitted to participate in the benefit plan. And that helps us control the risk for all of our current and future members. You must be a Canadian resident. We can cover you in any province or territory in Canada except for Quebec. Their public prescription drug legislation does not permit us to practice our benefit plan coverage in that province, but any other province or territory that you retire to is eligible under our benefit plan. There's no age restriction, so we don't kick you off the plan at a certain age. We have members in our plan who are over 100 years old, and they are still continuing to be covered under the benefits plan. Just because you reach a certain age, an arbitrary age, we're not going to kick you off of our benefit plan. And should anything happen to you, your surviving spouse or partner may continue coverage under the plan. Again, if something happens to you, we're not going to kick off your dependents. They can still continue under their own benefit coverage through ARTA. And we have a lot of different plan options for you to consider. We want to make sure that you are able to select the level of coverage which makes the most sense for you and your family. We have two different groups of plan options. The first we call our comprehensive plans. It's available for those retirees who are not yet age 65. And the difference is if you are retiring under age 65, you are not yet eligible for coverage through the Coverage for Seniors plan, and therefore you won't have your prescription drugs covered under that plan. This plan would be the first payer for prescription drugs, and so we have some plans available through the comprehensive plans that are that provide higher prescription drug maximums. We also have the build your own plans. These are typically taken by people age 65 and over, but if they are sufficient for you, you can take them at any age. So if you're age 60, you can select one of the build your own plans if it makes sense. So just touching briefly on the comprehensive plans, most of the people in the presentation today are likely age 65 and over, but if you're not yet age 65, we have 3 different plan options from which you may select. The core health is the more base coverage. Essential health is middle of the road, and the enhanced health is the Cadillac plan. That offers the highest coverage levels and highest maximums available through the ARTA benefit plans. So we cover the pretty wide gamut of those benefits that you would be covered for currently, including prescription drugs, paramedical services. We actually offer a combined annual maximum for paramedical practitioners instead of individual maximums for paramedical practitioners. We looked at our experience, which indicated that people who use a paramedical practitioner typically claim about 1.5 paramedical practitioners per year. They're not claiming 10 or 12 different practitioners. Therefore, they're getting more bang for their buck by having these combined annual maximums. We have separate diabetic supplies maximums, and that is because we keep those expenses separate. A lot of other plans actually include them under their prescription drugs annual maximum, whereas we have an additional maximum available for diabetic supplies. The emergency travel is available under each of these plans. And again, I'll talk more about that in a moment. And dental care is automatically included under the comprehensive plans coverage. Going into the build your own plans, as I mentioned, these are available at any age. There are 4 different plans available. 2 of the plans have travel, whereas 2 do not. The reason we offer these plans with or without travel is because once a person gets to an age where they no longer wish to travel, they can select to drop the travel on their own accord and not have to pay those additional premiums each month. So they can still continue their extended healthcare coverage without having to pay travel premiums, which saves them some money every month. The 2 different plans have some higher coverage levels if you select the HealthWise Plus or Ultimate Health plans. And each of these plans is available with either $1,200 or $2,000 annual prescription drug maximums. That may not look like a lot of money, but based on our experience, only about 1.5% of the people actually reach these maximums. And that makes sense when you remember these plans were designed for people aged 65 and over who have some public health care coverage available that is typically the first payer for most prescription drugs. So you can make that $1,200 or $2,000 maximum go pretty far. We cover all of the same paramedical practitioners under these plans, up to either $1,200 or $1,400 per person per year. Diabetic supplies is separate. It's not included in the prescription drugs maximum, obviously. Excuse me. Vision care is available, pretty healthy vision care coverage of either $425 every 24 months or $550 every 24 months. A very long list of medical aids, including a lot of items that are not typically covered under a benefits plan, because we are a retiree plan. So we cover things like standing lift chairs and other specialized equipment for seniors. And those HealthWise Plus and Ultimate Health plans also cover some defined lifestyle medications at 50% coverage up to $150 per year. And that includes hair loss medication as well as erectile dysfunction medication. Dental care is optional with the build your own plans. And again, we have options available to you so you can again select the level of coverage which best suits your needs. The first option A is the most comprehensive. It covers 80% of basic preventative and minor restorative with no annual maximum. 80% of minor restorative, that's typically root canals, up to $750 per year. And 50% of major restorative, so dentures, implants, and crowns, up to $1,600 per year. Option B is similar to option A, but doesn't provide any major restorative coverage. And option C is the same as option B, but pays at a lower level, 65% reimbursement instead of 80% reimbursement. And our emergency travel plan is unique and without a doubt, the best emergency travel plan available for retirees in the country. We cover 100% of eligible expenses, up to a lifetime maximum of $5 million. The $5 million lifetime is a little bit of a red herring. Every travel plan is going to include a maximum, whether it's lifetime or per trip. The highest claim that we've ever paid under our emergency travel plan was $840,000. So nobody has ever come close to that $5 million lifetime maximum. We'll cover every trip you take, up to 92 days per trip with an immediate reset. That means all you need to do is travel back to your province of residence, and that 92 days resets, and you can go on another trip. If the 92 days isn't long enough, for example, if you want to go on a 6-month tour of Africa, we offer supplementary travel as well. That's available in 15-day units for up to 212 days for a single trip. We have no stability clause for pre-existing conditions. Virtually every other plan has a stability clause. It's typically 90 days, which states if you visited your doctor or if your prescription drugs changed in the 90 days prior to leaving on your trip, anything that you talked to your doctor about, or anything that you had a change in prescription drug dosage or a change in drugs, is not going to be covered while you are traveling. We look at it differently. We want you responding to changes in your health. We want you checking in with your doctor if anything happens to you. If something does happen, we urge you to cancel your trip. And in that case, we have trip cancellation, interruption, and delay insurance built in to our emergency travel plan, up to $10,000 per year per incident. Per person, per incident. So we know that some people will actually avoid going to their doctor if they have a stability clause included in their emergency travel. And that's the last thing we want. We want you looking after your health. We want you visiting your doctor. And if you're able to travel, then go ahead. If anything happens to you while you are traveling that's considered sudden and unforeseen, you're going to be covered on your trip. If your doctor says, you know what, I want to send you for some tests, I'm a little bit worried about what I'm seeing and what you're telling me, cancel your trip, get your money back through the trip cancellation insurance, and therefore you're going to be made whole. We have no termination age, as I already mentioned. If you're 95 years old and still able to travel, we absolutely support that, and we will continue to cover you. And we have no deductible. In order to join the ARTA benefit plans, if you are retiring right away, or if you're already retired, review your current health benefits plan. If you went with a different provider, we do have ways that you can still join the ARTA benefits plan. You can contact us, submit an application to us, fill out an application online through artabenefits.net. We have a lot of different ways of being able to allow you to apply for coverage with us. We always urge people, if your benefits are going to terminate and you know the date that they're going to terminate, apply 4 to 6 weeks prior to that termination date. We have a space on the application form where we ask what the termination date is. And so we will start to cover you the date after your current benefits terminate. If it has been more than 60 days since you lost your group benefits coverage, you do have to go through medical evidence of insurability. You have to complete a declaration of insurability form, and you are subject to medical evidence. So our underwriters will review that declaration of insurability, and they may or may not say that you can get coverage with ARTA. So if you are currently covered under a group benefits plan, we do encourage you to join us prior to the termination of that plan. And that way it's no questions asked, no declaration of insurability, no medical evidence. You can simply join our plan the day after your current coverage ends. I mentioned that benefit plan, the artabenefits.net. If you are wanting to compare the plans that ARTA offers, review all of the benefits that are provided, ensure that you are eligible to join the plan. Since you're on this presentation, there's a pretty good chance you are eligible. You can apply online. Everything is available on that website. We also pride ourselves on our transparency, and we post our booklets and all of the plan details right on artabenefits.net so that you can read the fine print and you can see everything that's offered through the benefit plan. If you do have questions, please post them in Zoom in the question and answer box. We will stick around for a bit and answer any questions that come up. If you think of questions after the presentation is over, please feel free to send those to info@arta.net. Thank you for your time.
I'm also just going to launch the poll for the webinar. So if you have a minute, if you don't mind answering those questions, that would be great. Thank you. Okay, I don't see any other questions coming on. If you do have any questions, again, please email info@arta.net and our member services team will get back to you as soon as possible. Thanks, Gary, for presenting on ARTA. ATRF is not here anymore, but if you guys have any questions, they did have their email address up there. So yeah, again, thank you so much for joining us today.